So today we're going to talk about the fifth wealth management principle, which is sharpening your financial saw. And as we had studied in the previous four principles, this is also one of the vital, though it looks very simple, but one of the vital principles that kind of helps you to really build great wealth in less time. So the motto of this principle is you got to keep learning and you got to do it lifelong. Learning never stops, so we got to make sure that we are continuously sharpening our learning, continuously sharpening our financial saw as long as we live. Ask yourself these questions. You used to learn a lot of new things earlier, and nowadays perhaps you've stopped learning or you've reduced the learning that you used to have earlier. You also feel that you're slowly becoming outdated as you compare yourself with your peers. On the other hand, you might also feel that you're already a master and you don't need to learn. Now, these are certain questions that if the answer is yes or answer is an affirmative for any of these questions, then perhaps it's a matter of concern. You might also feel that you don't have time to invest in your learning and you're quite busy in your day-to-day routines and in your job or business or life. You can hardly get any time to learn. So whatever be the reason, if you have stopped learning or if you have reduced the amount of learning that you used to have, it's going to show in your results at some stage of life. And obviously the results are not going to be positive. So learning is a lifelong activity, and we got to first understand how critical it is, and then we got to find out time. And as we talked about time earlier, everybody has 24 hours. It's all about prioritizing what you want to do today and what you want to postpone or take it on lower priority. So what's in it for you in this session? You're going to understand the fifth wealth creation principle, sharpen your financial saw. And in the previous modules you've already studied about the amazing power of compounding, paying yourself first, starting early and getting started. And today we're going to learn about sharpening our financial saw and how it applies in every aspect of our life, including wealth management. And it's one of the very important principles which we often tend to ignore, again at our own peril, because keeping yourself outdated or letting yourself outdated is not really going to help you at any stage of life. So I'm going to start with the age-old story about sharpening the saw. Once upon a time there used to be a very strong woodcutter who asked for a job in a timber merchant, and he got the job based on his strength and his physique and the motivation he had to cut wood. And the pay was really good, and so was the work conditions. So for those reasons, the woodcutter was determined to do his best in terms of cutting maximum wood every day and getting back to his boss and telling him how much he's been able to cut. So the boss gave him an axe and showed him the area where he was supposed to work, and it was a jungle where he was supposed to cut trees. And the first day the woodcutter of course did his very best, tried to impress the boss, and was very motivated and brought 18 trees, and which was of course higher than what the boss had expected. So once he brought 18 trees, boss congratulated him and said, "Congratulations, go, I mean you're on the way. I mean, that's one of the best cuttings anybody has ever brought. 18 trees, fabulous, so keep going." So very motivated by the words of the boss, the woodcutter tried harder the next day. Unfortunately, although he was trying harder, he could only bring 15 trees, 3 less than what he brought on the first day. Well, the boss did not say anything. He just accepted that, and it's okay. It happens few days, so move on, no problem, you carry on. 15 is still a good number. But the woodcutter thought that I should try a little more harder, because he didn't want to land up in a situation where the boss is unhappy. So the third day he tried even harder, but he could only bring 10 trees. So 5 less than what he brought the second day. Now, day after day, he was bringing lesser and lesser number of trees, and a stage arrived where he could only bring 5 trees in an entire day of hard work. Now, remember that he was still working very hard. He was trying to push himself. The woodcutter was trying his level best. I must be losing my strength, woodcutter thought, because there's no other reason why I would be bringing in less number of trees, because I'm working hard, or I know that I'm not relaxing, or I'm not really spending more time away from my main job. He went to the boss and apologized, saying that he could not understand what was going on. The only reason he can figure out is that he's lost his strength. The boss asked a very simple question. When was the last time you sharpened your axe? Sharpened my axe? I had no time to sharpen my axe. I've been very, very busy trying to cut trees. When do I sharpen my axe? I didn't have time. Now, this is a very, very simple story which reflects on the fact that we sometimes get so busy in what we are doing that we don't have time to sharpen our axe. And it's the same principle that applies to our financial life. We get so busy in earning money that we fail to think about what we're going to do with that earned money, or what the earned money is doing for us. We forget to study about how we can maximize returns out of that money that we already earned. We keep giving ourselves the excuse that I'm very busy earning so much money, and I really don't have time to really understand about where to invest it to maximize the returns, which investment tools are right, which gives how much returns, which are taxable, which are not. So I really don't have time to really understand all that, and I'm pretty occupied earning money. That's exactly the situation where we land ourselves up. And this is not a few people. Based on my experience with hundreds and hundreds of my book readers, I understand that this is a vast majority of people who have no clue about what the earned money is doing for them. Where is it going? What is it returning for us? Absolutely no idea. So that's the importance of sharpening your financial saw, and it's going to really pay you handsome returns if you really are smart enough to take out a little bit of time out of your busy schedule and start working on sharpening your saw. Let's see, where does this entire scenario fit in? Sharpening your financial saw has a huge impact to build your wealth, and I'll tell you why. There are only 4 sources to build wealth. That's what you see on the slide now. You can either increase your gross income, which means you start earning more, get a better job, do a bigger business, invest more in your business so that can return more, get a promotion. So these are the ways you can increase your gross income, and that helps really build great wealth. Increase your net income, which basically means that what actually comes in your hand, you increase that income, which essentially means saving on taxes and getting smart about how to show your income, where to invest your income so that you really get more money in your hand. Third way to handle this is to reduce your expenses. That's another way to really start saving more while your income may stay stagnant. You can also reduce your expenses to improve your savings and therefore contribute those savings to building your wealth. Of course, there is a certain limit beyond which you cannot reduce your expenses, and certain mandatory expenses you will have to do. And the fourth and the most critical source of building great wealth is improve your returns or investments, which basically means whatever you have saved till now, whatever you have invested till now, how you can use that money to work for you and get better returns for you. Now, this is very, very, very critical, because the key aspect here is you're getting your money to work for you. You are not working, you're getting your money to work. That's very important to understand, and that's where most of us do not really understand its importance. We try to work ourselves, we try to work harder, try to cut more trees, but we forget that if we spend a little bit of time in getting our money work for us, in sharpening our axe, then it can give us fabulous returns. We will not have to work that hard to earn the amount of money that we really earn, or the amount of money that we can earn with the same hard work would be much more higher and will help us build great wealth. Now, it's in this particular area, improving your returns on investments, that sharpening your financial saw really fits in. How critical it is. Out of all the four sources to build wealth, improving your return on investment plays the biggest role in building great wealth in less time. There's a limit to the amount of money you can earn depending on your situation, the amount of money you can save through taxes, the amount of money you can spend on your expenses. You cannot reduce that beyond a limit. But there is a huge potential to increase the return on your investments. Huge potential, and a lot of people I've met, I've interacted with, have no clue at all what their money is returning. Forget about improving. They have forgotten they have earned their money, they've forgotten, put it somewhere, and they have no clue what's it giving back to them. They don't even look at it from that side. While the fact is that a small increase in your return on investments can far exceed any increase in income, and that too fairly quickly. We'll see it by an example in the subsequent slides. This lever, the fourth lever, that's what we're talking about, keeps becoming more and more critical as your wealth keeps increasing, because it's a return on your investments. So if your wealth is increasing, if your investments are more in number, a small percentage increase in your return on investments can make a huge difference to your overall wealth. So this is the most critical lever in your hand, and most of us have ignored it. So we've got to sharpen our saw. We've got to understand how we can maximize the returns on our money, how we can make the money work for us. So let's see this example where there's a person called as Rohit who has a salary of around rupees 80,000 per month. At the same time, he and his family have expenses of around rupees 60,000 per month. So the balance rupees 20,000 is what he has the potential to save and invest. So he saves and invests those 20,000, and he's been doing this for the last 15 years while he has been working. Over the last 15 years of working and diligently saving whatever he can, Rohit has been able to accumulate a corpus of around 1 crore rupees, which is big, which is good. His returns from the corpus are approximately 8% per annum after taxes. So over the last 15 years of working and saving, Rohit has been able to accumulate a corpus of approximately rupees 1 crores, which looks big, but if you calculate, it's not that difficult to accumulate if you're really diligent, disciplined, committed to save that much amount of money over a period of 15 years. Now his returns from his corpus of 1 crore today is approximately 8% per annum after paying all the taxes. So he has his money accumulated in fixed deposits, provident funds, and so on and so forth, and the post-tax returns are close to 8%. He's at the same time working very hard for his next promotion, which is likely to increase his savings by another rupees 10,000 per month. So he's trying to build great wealth, and he feels that instead of 20,000 per month, if he can start saving 30,000 per month, it can have a big impact on the overall wealth that he's going to accumulate. And that's why he starts to work on his promotion, and he's really focused very hard on that. And since he's really focused very hard on his promotion, he does not have time to sharpen his financial saw, and his entire focus is on the next promotion. How wise is Rohit? So we're going to study the impact in the next slide of what impact does it have if he continues to focus only on his promotion. So if Rohit keeps his focus only on promotion, there are a few things that are going to happen. Let's assume Rohit gets a promotion, and let's assume that whatever increment he gets because of the promotion, he's able to really save all that money and continue to be as disciplined as he was earlier, and so therefore his savings go up by rupees 10,000 per month, which is good. So now he's saving 30,000 instead of 20,000. But remember that not everything is in his control, because his promotion depends on how hard others are working. So it's not sure whether he'll get promoted, but yeah, on the best case side, he will start saving 30,000 per month. But let's say a scenario where Rohit also focused a part of his effort in sharpening his financial saw and was able to get 2% better returns on his corpus by investing his corpus smartly, which means he has a corpus of 1 crore where he was getting 8% returns, and now he was able to invest it smartly and started getting 10% returns on his corpus. So his returns from his corpus investments would increase by 2% of 1 crore, which is around 2 lakhs per annum, which essentially means on a monthly basis around 16,000 per month. Which means that paying a small attention to his corpus and the returns that he was getting from his corpus after sharpening his financial saw, he was able to increase the returns by just 2%, and that led to an increase of an income for his corpus by approximately rupees 16,000 per month, which is 60% more than what he would have got had he got his promotion, right? This increase of 16,000 per month is much more in his control, because he's got to study a bit, invest it smart, and that's it. It's not dependent on somebody else. And the best part is that as his corpus grows, this 2% is going to grow, while his promoted income 10,000 per month is going to stay like that for next few years. It's going to always stay 10,000 for the next few years till he gets the next promotion, and which makes his life even more tougher, of course. This 16,000 per month will become 17,000 per month next year, will become 18 or 19 or 20,000 per month next year, because your corpus is growing and the 2% effect on your corpus will keep growing. So once your corpus become 1.2 crores, the 16,000 becomes 18,000, and so on. That's, if you understand, so that's the critical piece we tend to miss out, where we forget about what we're doing with our earned money. So to summarize, while increasing income and reducing expenses is important to build great wealth, the biggest lever that you have in your hand which contributes to growing your wealth quickly is to increase your returns on existing investment, is to make the maximum out of your earned money, and that's by making your money work for you. This looks very simple initially as to why we didn't focus on that, but that's how it is. We often overlook what we are doing with our saved money. This is how you should look at it. The money that you have earned and invested, each of that money is like your employee, and you are the CEO of your life. So you have all your employees working out, they're out for you, working for you, earning money for you. So if you invested 10,000 rupees in a fixed deposit, that's an asset working for you, and it's going to earn rupees 1,000 over the next 1 year and give it back to you. And so similarly for all your assets that you've created and invested and which are earning money for you. And if you see that any of your employees is not performing, you got to take a decision. Either you would make it perform, or you will have to take him out of your company, of your life, and bring a new asset or a new employee. It's very simple. You are the boss. If you do not make your employees earn for you, ultimately you're going to work hard. You're going to work very hard, and you're going to earn less of money. So employ more, get more assets going out there in the market earning for you, and make them work hard for you. You must make your money work for you. I think that's the critical piece, and that happens only when you're able to sharpen your financial saw. You understand the market, you understand which assets give you better returns. That's when it's really going to work for you, and you'll realize that your money can really earn for you. So that's it for this particular session. So if you want to ask any questions, you can always write to help@manoj-arora.com. You can always visit our website www.manoj-arora.com. Thank you so much.